Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 8:54 a.m. Eastern Time on Wednesday, uh, September 8th. Just a reminder, crude oil inventory will not be today. It will be tomorrow at 11 a.m. Eastern Time. So looking back at yesterday's action, right, the Russell was weak, the ES was weak, the Dow was weak, and the NASDAQ was bullish. Looking at the overnight time frames, they were all weak, and the Nasdaq was neutral. So keep that in mind going into today. Looking at the linear regression channel, right? So we've tugged this trend line, which is the orange line, for 6 sessions now, right? We could start drifting back. I don't think we're gonna see the bottom of this and get into the buy zone this week. That would be basically 44.15 to 43.50 would be where you'd want to really try to swing for another buy back to the top of the channel, or to trend, I should say. So we'll see what happens with that, but we can dance around in the middle there for sure. Uh, Looking at the midterm time frames, right? The title of my video is "Will the Russell hold 2252 this week?" And that's really where the resistance was. And I think that's going to be the bigger tell for risk on, risk off appetite for the market this week. Even though I think the Russell has lost correlation with other indexes, I think it's going to be a good barometer to see whether traders have a risk appetite or not. So right now we're trading around 70, which I've got a line right around 67. That's a soft line, right? It's just basically a split between 52 and 83. And then above that, you go back up to 2301, 2312, and then 2329. So we'll see. Below, failing to hold this, right, I think you're going to get a pause right around 2238, 2240, and then, head back towards that 2229 area. Looking at the ES, right, this is that box that I drew out that we were holding until yesterday. Right now we're starting to fall in. So basically this is a consolidation. We could duplicate this and run it down one more time since it was a little bit longer, right? So if we duplicate that box, drive it down one more time, this is really where we're looking to get into. Would be right around this 44.6250 area of the chart. If we don't hold this 44.8550 to 44.9250, and if you look at the overnight action, right, we didn't even get down to the 92.50 yet, so I think we're okay there so far. Look at the Nasdaq; it would be the exact same pattern, and you can see really the structure below the low on August 26th, right? That's going to be where, traders freak out a little bit more than likely, but you've got a lot of support down here around 15,200 to 15,000 even. And, we haven't even began to lose this range, right? It's just a top of the range, bottom of the range until it breaks. And you can see it's still even drifting higher, right? So the pain trade is still higher, right? Because the bears are up here shorting this, thinking that it's overdue, right? And they're probably getting ready to have their faces ripped off once again. I don't think there's as many longs that have a stop under here that are just going to start liquidating when it breaks, right? I think there's more pain ahead for the bears up there, and we'll see how it plays out. But there are your lines. Just watch the range trade. Looking at the Dow has broke down, right? It went when I say it broke down, it went back down to the 35,000 range, right? So we were talking about that yesterday, that if it couldn't hold this, that's where it was heading. It's pretty much stuck in there right now, and you can see it had the longest consolidation and still never made that high. Of concern, right, would be getting below this low from August 19th. Right, so if you just drew a fib even from the low to high, we're probably at least holding minorly up there. Looking at the overnight action, 28 points basically in the overnight action, and I did just because we had hit the profit target up here at that 45.36. We traded a while just to be aware of where it was. I just drew from that entry to the high, right? You're looking at 44.72, 73 to 44.50. These are just the generic draws I'm looking at, right? Jack's going to give you the main draws that he thinks are in play right now. But I'm just using this as a reference, right? Because if this doesn't hold, right, it's been holding for a while, the next measured move, things could get a little bit more dicey in the market. So I'm just using it more as a indicator on the dashboard than looking for entries and exits on it at this point in time. Looking at the overnight action now, below yesterday's low and below the underwater trades for the Russell. And then everyone else is in and around value area, low or in value area, right? So it's that Russell. And then, like I said, getting if the Russell trades below that overnight low, right, then we want to see if those 2252s hold. And you can see there's support basically between 2245, 6 to 47. So basically, let me rephrase that from 2246.5 to 47.5. That's where support should come in, even below the 52s if it doesn't hold. That would be a great first test buy, in my opinion, with basically about a 3.5 point stop on entry. And then if you see a response there, just move that stop up. There's no sense screwing with it. It's either going to hold that area or it's going to fail, right? So just take it and go with it. And it's one of those trades that should work or it shouldn't. So looking at where we're at today, the Dow, right, for the bulls, they need to recapture 35,214, and then we'll see if they trade back through these 39s again or not. But they could dance between these levels, which would be just a smidgen over yesterday's bell high and back down to that 35,214 level on the bullish case. Bearish case, it just keeps backing and filling, so choppy to down on that. I hope this helps. We'll talk to you tomorrow, and remember, no crude oil inventory today.